Good evening, viewers. My name is Imran. I'm a UK and international tax specialist. Today, I'm here with another interesting video. In this video, I will explain to you what are the exempt benefits provided by employer to the employee in the UK. So stay with me. I will explain to you in more detail. This topic is highly tested in ACCA, ACA, and CTA exam. It is also helping employers and employees in understanding the relevant exemption available on provision of certain benefits. This video is with illustration, which will make it very easy for the viewers to understand the concept. After watching this video, you will clearly know what are the exempt benefits. You will know the rules and you can take over the question in exam or in practice. Now understand the rule. Business expenses are allowable if they are wholly, exclusively, and necessarily incurred in the performance of the duty. Also remember, if an employee incur an allowable expense and it is not reimbursed by their employer, the employee can claim deduction in their self-assessment or filing P87 form. If employer reimburses those expenses or those costs to the employee, this will be tax-free for employee and the business can claim corporation tax relief. So the rule is very simple. The employer send one of their employee to a seminar. So the employees spend money on travel costs. So if an employer reimburses those travel costs, so this will be tax-free for employee and obviously the employer can claim corporation tax relief as a travel expense paid to their employee because it was necessarily and was wholly, exclusively, and necessarily incurred in the performance of duties. Here is example. Burger King sent one of their employees to food show in Liverpool to launch a new product. So his name is Simon. Simon stayed at hotel at the cost of £100. On his return, he claimed £100 from Burger King. So point to remember, trip to Liverpool was wholly for business purpose. So if the company will not reimburse the cost, Simon is entitled to a deduction in respect of £100 on his self-assessment or sending HMRC P87 form, and HMRC would send him some tax refund because Simon went for the reason of the business. It was necessarily and therefore a deduction is available for Simon. So if employer reimburses, so the payroll should simply transfer £100 to Simon. This amount should not be reported on the payroll, hence no tax and national insurance. So that is rule number one. Illustration one, continue. Continue to previous example. Now assume Burger King paid for the hotel and travel costs for Simon to attend the show. So point to remember, as the trip was for business purpose and Simon would have been entitled to claim deduction in his self-assessment, hence this is an exempt benefit. Therefore, it is not taxable benefit for Simon. If employer pay or reimburse non-allowable expense, the exemption will not apply or could partly apply. The reason for saying this, for example, if Simon spend £100 and the employer reimburse £150, so there's a profit element of £50, that £50 will be subject to income tax. So if the employer reimburse the original amount, the one Simon spent while on duty and sent by employer, and because of it was necessarily for the business, hence there will be no income tax implication for Simon, and the business can claim corporation tax relief. Mileage allowance. This one is very important. So if an employee uses his own car, the employer may choose to pay mileage allowance. HMRC has published approved rates, no benefit charge if the employer pay at or below those rates, and there's no reporting requirement. If employer pay above the mentioned rate, the excess will be reported on P11D form. 45 pence for cars and vans for the first 10,000 miles, and after 10,000 miles, the rate changed to 25p. 24p for motorbike, regardless of the miles driven. So this will be highly tested, and obviously in practice as well, you will constantly ask this question about the mileage allowance. So remember this because it's highly tested. Now here is example. Simon uses his own car for business journey. In 2022-23, he traveled 15,000 miles. His employer reimbursed at fixed rate of 72 pence per mile. So remember, he got a reimbursement of 10,800. However, you need to follow the rules. The rule is for the first 10,000 mile is 45p, and for the rest of 5,000, because he drove 15,000 miles, so then he should have got a reimbursement of 25p. So the total reimbursement he should have got is 4,500 plus this 1,250. So therefore, the employer reimbursed then more than what was required. So the additional amount will be reported on P11D, and Simon will be subject to income tax, and the employer will pay employer NI. There is another example, continue. What will happen is, assume the employee or Simon was paid at the rate of 30p. Now the calculation will be as follows. So the reimbursed amount Simon got is 15,000 miles he drove. He got 30p per mile, so that he got 4,500 pounds. However, his entitlement based on the prescribed rate by HMRC, so he should have got more than that. So therefore, there is a deficit of 1,250 pounds, so that can claim on self-assessment or filing P87 form, and HMRC would send him a tax refund. So you need to remember the rule, okay? Very important. Mileage allowance further aspect. For class 1 NIC purpose, 45p rate, 24p for motorcycle and 20p for cycle is used regardless of number of miles driven. Remember, the 10,000 and this mileage above 10,000, this 45p and 25p rates apply for income tax purpose only. For national insurance purpose, the 45p rate applies regardless of number of miles driven. If the employer also reimburses fuel for business journey in a company car with the reference of HMRC published advisory rates, then no taxable benefits either. Also remember, passenger payment can also made tax-free if no more than 5p per mile, as long as the driver and passenger are fellow employees. But if an employee does not receive the actual allowance, he cannot claim relief in his self-assessment. So that is the rules to remember. Also remember, exemption for mobile phone. If employer provides an employee with one mobile phone, this is exempt benefit even if the mobile phone has private usage. This will be the case if employer provides one phone to their employee, and an employee use it for private calls. So this is exempt. However, if an employee has his own mobile phone and the employer reimburses for private calls, then there will be taxable benefit. There is no exemption if employer provides phone for the employee family member. Very important from exam perspective or in practice. Expenses of removal or relocation exemption. A maximum up to 8,000 is exempt. This will be the case if employer transfer the employee from one office to another and pays or reimburse the relocation cost, then up to 8,000 is not taxable. So remember this, in exam paper or tax in the tax table, this will not be given to you. You have to memorize it. Any excess will be taxable on employee. Exemption will only be available if employee actually change his main residence and the new residence is in reasonable commuting distance of the employee new workplace. Very important. So qualifying removal expenses will include acquisition and disposal costs, including any abortive costs, removal and transportation costs, travel and subsistence linked to the property search, replacement of domestic goods for the new residence. Furthermore, legal fee including stamp duty, cost of early redemption of mortgage, any maintenance, insurance, security costs while the old residence is empty, estate agent fees, survey costs, disconnection of utility. So these are the falling under exemption. However, in exam, if you see some kind of weird expenses or you never heard of it and the employer reimburse, this will be taxable. I will show it to you with illustration. The exemption also cover cost of temporary accommodation if there is a gap between finding new residents and disposing the old one. Now, here is the illustration, remove and relocation cost. Simon is an engineer employed by Sharp Limited at Manchester office. The company opens a new factory in Liverpool. Simon takes on duty in Liverpool on 1st of June 2022. Sharp pays for the following expenses in relation to removal. Descriptions is given to you: family trip to Liverpool to find suitable accommodation. Obviously, that is falling under exemption. Survey cost on Liverpool property, estate agent fee, as we see in the previous slide, legal fee, furniture, stamp duty, cost of assignment, temporary accommodation, appliances, and the cost of decorating Simon main bedroom. So this on regarding this expense, the last one, so we didn't see an exempt list. So therefore, you need to be very vigilant. So identify those kind of expenses which does not fall or do not fall under the exemption. Now, as we see from illustration, all expenses listed falls in exemption apart from 1,000 spent on Simon bedroom decoration, and that was reimbursed by his employer. So therefore, total qualifying expenses are 9,100. So you remove that 1,000 and only 9,100 falls under the qualifying expenses list. So 1,000 are non-qualifying expenses, and this is reimbursed. This will be added to Simon wages because the employer pays him, but it was not falling under the qualifying list. So this therefore is subject to PAYE and NIC. Qualifying relocation expenses will be reported to show on P11D of Simon £1,100, because remember 8,000 is exempt. The remaining £1,100 will be reported on Simon P11D because the employer reimburses more than what's the exempt amount. So any money in excess to exemption will be subject to P11D, and Simon will pay additional taxes and the employer will pay employer NI. Miscellaneous exemption. Okay, miscellaneous exemption. Pension contribution and advice. Employer pension contribution to employee pension scheme is exempt. If employee wish to change from occupational pension scheme to defined contribution scheme, if the employer encourage employee to transfer to new pension, provision of any independent advice in relation to this change will be exempt. One-to-one pension advice cost no more than £150 per head to employee is exempt. So thanks for watching. If you do have any queries or any question, you can drop me a line or two. Because the list is quite long, so I have to split this video in part 1 and part 2. So I will be making another video, part 2, which will cover the rest of the exemption. It's very important for you to understand the exemption, because in exam you don't have too much time. You do have time, but you don't have too much time. Examiner will be testing you. They can make it as a part of a long question. They will say to you, oh, the employee received wages, this. There's some taxable benefit. However, they can include some exempt benefit. So if you understand the rules, regulation, and sometimes this is good to remember them as well. It will make your life easy. If you like this video, you can subscribe for more interesting video, because I'll be making more videos on other subjects. For example, corporation tax still need to be covered, CGT, capital gain taxes, inheritance taxes, VAT, financial reporting, performance management, and financial management. Thanks for watching. Wishing you a very good night.